Good morning and welcome to Market Opening on our brand new collab show between Business Today and India Today TV. It's just after 9 and we're here to get you ahead of the curve as markets kick off trading for the day. Let's take a look at what's hot in the corporate and financial space this morning. Markets set for a roller coaster ride this week. Asian markets plunge after heavy selling on Wall Street on Friday. Trump's announcement of 100% additional tariffs against China shocking investors. Later, statements softening the blow have done little to mitigate nervousness. It's also an earnings-heavy week on D Street. Tata Capital all set to make its debut in the stock markets today. The largest IPO of the year, 15,500 crore rupees, was subscribed around 2 times. Analysts expect the listing to be muted with the current grey market premium just 2% to its issue price of 326 rupees. Surge in prices and demand for silver after Kotak and UTI. SBI Mutual Fund also suspends fresh investments in its SBI Silver ETF from today because demand far outstrips the availability of physical silver. Regulator expected to step in to curb market volatility. MSMEs in focus today. Finance Ministry to hold key review meeting to assess the impact of US tariffs on the sector. Officials to specifically gauge trade pressures and possible policy responses. The meeting will also focus on evaluating the credit needs of small businesses and financial inclusion schemes. It's the start of a very special week on Business Today with top market masters lined up this entire pre-Diwali week. Today, join BTTV's YouTube channel for 2 exclusive conversations with one of the biggest stock market players, Ramdev Agrawal, and then with renowned global commodity guru, Jim Rogers. All right, let's take a look at the global setup. Trump playing havoc once again and fears with regards to the trade war with China and all that could possibly unfold on that front playing into sentiment. Take a look at the overnight setup as well as what really transpired on some of those tech stocks. Massive cuts coming in there on the S&P, Nasdaq and Dow on Friday. Tech also being hammered pretty much, and that sentiment reflecting in Asia this morning. The Nikkei being closed, but the other Asian markets, there you have it with Apple down almost 4%, Meta down almost 4%, and Tesla down 5%. So we saw a hammering on US stocks. Asia this morning, as I mentioned, also taking that same tonality overnight. And let's see what we have in store for the index here this Monday morning. We've got Amrish Baliga and Shailendra Bhatnagar joining us this morning. Good to have you both with us. Before I come to you, Amrish, let me just go across to Shail for a quick look at the technical setup and how the index is set to open this morning.
A very good morning to you, Abha, and to all our viewers. A warm welcome for this fresh week ahead of Diwali. Lots of positivities working in the market. But for today, there's going to be a pullback, which means a mild opening, 100 points lower gap down because of the Wall Street issue that you highlighted. But 25,300, 25,200 is a very strong support level. Remember, last week, Nifty gained 391 points. So if you give back 100, 150, it doesn't matter. Strength in Bank Nifty, a 1,000-point rally last week, about 1.2, 1.3% uptick. PSU banks are doing very well. Private banks are catching up. So that's the trade on the long side as far as market is concerned. Try and buy this dip, Abha.
All right, Amrish Baliga joining us this morning. Amrish, what a setup today. We've had, of course, lots of overnight cues with regards to global commentary coming in, but at the same time, so much action in the domestic markets with a whole host of earnings leading up to Diwali as well. What do you feel is in store for us this week, or at least in the short term?
Good morning, Abha. Yes, I mean, global markets clearly are volatile and going to be volatile as long as President Trump is there, because you never know as to what he's going to tell you tomorrow morning. So clearly, uncertainty on the international trade and commerce. But despite all this, despite the tariffs which were there on India, H-1B visa issue, Chabar put issue which directly affects India, then you had the Saudi-Pak Defense Pact, which again affects India to a large extent. Despite all this, if we have not seen a crash in the Indian markets, we just saw a correction, and from lower levels, we have seen an extremely good sort of a bounce back. Clearly, because of the GST announcements, and overall, I mean, our macros are still doing decently well. So I don't see much of a downside for the markets, even because of the Saturday announcement as far as 100% tariffs on China. Yes, because of the global markets, we will have some sort of a knee-jerk reaction. I mean, we should clearly be opening lower. But then I see a decent amount of bounce back from the lower levels. So if you're talking of the next couple of weeks, I will not be surprised if we move more towards that 25,500, 26,000 band than lower than 25,000.
Okay, so that's a fair assessment on really where we stand right now. We're seeing a bit of a sea of red everywhere. I want to get a quick check from you on the mega IPOs, Amrish, because Tata Cap listing fairly muted. What do you attribute that to versus what we're seeing, for instance, in an LG, and it's a runaway success?
See, people were looking at Tata Capital basically from the gray market level, and despite a huge discount, I mean, to the gray market, still, if you look at the valuations were still decently expensive. I mean, if you compare with something like a Bajaj Finance, a L&T Finance, or even a HDB, I mean, where the issue had come recently, compared to all these, Tata Finance was still on the expensive side. So clearly, I think the listing is going to be quite muted, but I don't see a major cut from here because whatever said and done, it was at a decent discount. So I think it'll hold on at these levels. And in case someone's looking at long term, yes, I mean, if you see it about 5-8% lower than the IPO price, I think it could be a good time to buy.
All right, so that's the comment coming in on that one. We're just counting down to the opening bell. A few other stocks that are going to be in news. We've got Lupin with a pre-approval inspection in New Jersey for a new plant. We've got Welspun, where the board's going to be meeting to consider fundraise via convertible equity warrants. A couple of these stocks that are going to be in news this morning. We've got All Cargo with an NCLT nod for its composite scheme of arrangement. Earnings, that's a very earnings-heavy week. Watch out for IT. We've got HCL Tech that we'll be watching out for there as well. Asian Paints in the news. New manufacturing facility. It's commenced commercial production there as well. So keep an eye out on Asian Paints and producing white cement for in the UAE for export growth. So that's why that particular property is important. There's the opening bell for you. Let's take a look at how we are stacking up this Monday morning. Down about 0.3%, not too bad. As Amrish said, likely to be range bound. And Shell saying really use the opportunity of any dips to look at the market as an attractive investment opportunity. Right now, we're just seeing red across. IT is seeing a slightly more heavy pressure there coming in. On the upside, on the Nifty, iShares, Apollo Hospital, Bajaj Auto. However, on the upside, gains a little limited. And clearly, we are skewed towards declines. Only a handful of gainers right now in the market, and those primarily being from the auto pack. On the downside, IT, Trent, JSW Steel, Wipro's down about 1% this morning. We've got HCL Tech down ahead of numbers. Infy's down as well, 0.8%. So clearly that's where the pressure is coming from. ITC, Shriram Finance, Adani Enterprises, profit booking coming in there. Grasim is down about 0.7% as well. So that's really where we're seeing some of the profit booking coming in on the market. Shell, what are you tracking on opening?
Well, Abha, I'm just tracking this dip, which is lower than expected. That's a very, very big positive for the market. Overall, 522 stocks in the green and about 1234 in the red. This ratio should improve for the betterment as far as bears are concerned. It's the capital market space that's doing extremely well. Look at Bombay Stock Exchange, look at MCX, CDSL. These are the stocks that are recovering from intraday lows and doing pretty well as far as markets are concerned. MCX 1.9% higher, remember. Silver, remember. Gold, remember. Copper. No matter what investors do, MCX will always benefit because of higher volumes. So 9,000 is coming on MCX fairly soon in terms of all-time highs. Fortis Hospital is on a song. And in terms of top gainers, you have KFintech, you have Fortis, India Cement, Indigo, as also Hind Copper doing extremely well. Abha.
All right. Well, clearly commodities continue to be in focus, and we'll talk more about that later, but silver in particular. And we're also seeing that boost on commodities overnight, given what we saw with regards to volatility in the global markets. Amrish, we have seen a whole host of metal counters also on the move. For example, a Hind copper, which is continuing to be up to date as well. We've seen, gold financing related stocks running up on the back of the price hike that we've seen on gold. Where within that basket are you looking at for attractive opportunities?
In fact, I think gold finance companies can still see some more upside because their total universe goes up. In fact, their security also moves up because the gold prices are moving up. So gold finance companies would be one pocket, but again, I would say this opportunity possibly could be, over the next 3 to 4 months. Because whatever said and done, I think gold seems to be overbought, and you really don't know as to when the next correction will start. So this is a short-term opportunity. But as far as the other metals are concerned, I'm quite bullish on steel, zinc, and copper. Because copper, again, we are seeing at least another 25 to 30% move from here. So I think Hindustan Copper could be one of the stocks to be looked at. And among steel, I would say Tata Steel would be the best stock to buy at this point of time. In fact, we have a price target of about 230 to 40 for the stock.
Okay, I want to talk about IT as well, Amrish, because a lot of pressure building up there today. What do you feel is really happening here? Because TCS was slightly mixed bag. People were watching out on the commentary more than anything. Now we're watching out for HCL Tech, but across the board today, a little bit of pressure building up on IT.
I think the silver lining as far as IT is concerned is that the expectations are quite muted. So, in case the earnings are slightly better than what the expectations are, although it'll be muted earnings, but in case it's better than what the investor expectations are, we could see some sort of a bounce back because IT has underperformed for a long time. But as an investor, I would surely wait at least for the next 2 to 3 quarters because as of now, there's a decent amount of uncertainty. Clearly, H-1B visa will affect IT stocks, at least in the medium term. In the short term, there's no effect, but at least in the medium term, there would be surely an effect on the IT stocks because of this. And the other biggest issue is AI. We need to see as to how these big boys, in fact, reinvent themselves. To make up for the issues which has created for them as far as AI is concerned, because there will be margin pressure. So unless they reinvent themselves, I don't think, they can continue holding the sort of margins which they've done in the last decade or two. So that's something to be looked at. And TCS also has commented on that, but we need to see as to how it plays out over the next couple of quarters.
All right, so keeping an eye out on IT, and let's take a look at the screen and the broader markets and where some of the other trends are, some of those top performers. Managing to pull out any shell from that list of 500 odd?
Well, Abha, silver, and silver all the way. 3.27% higher on MCX, gold 1.5% higher, copper 1.5% higher. All put together a very strong rally. Silver Bs, the top gainer in the top traded list, 2.9% higher, 158, and the metal itself at 1,51,161. So this rally refuses to abate. Two trips that you mentioned on Kotak and SBI, the mutual funds stopping inflows in silver ETF, point to a blowout that is going to happen in the cash market for this commodity. Apart from that, strength in a bit of pharma, Divi's Lab is looking good. CDSL is priming up, Bajaj Finance in top shape, all because of the festival season, in particular Bajaj Finance.
All right. Well, let's take a look at what's happening on silver. Three leading mutual funds, Kotak, UTI, and ICICI Pru, have temporarily stopped accepting fresh lump sum investments in their silver ETF fund of funds. This is aimed at protecting investors from inflated silver prices in India's physical market as demand massively outstrips supply. Reportedly, there's an acute shortage of physical silver in the country due to shipping delays and the festive season demand. And that's led to a spike in silver prices in the domestic market. These are now at a huge premium to global rates, a massive 12% against the normal premium of around half a percentage point. So new ETF units can't be created as they need the backing of physical silver. Now, this prevents investors, of course, from entering at what seems artificially high prices and subsequently suffering short-term value erosion. But there's also a catch. Existing SIPs remain unaffected and regular investments will go on as usual. Let me go across to Vandana Bharti, Head of Commodity Research at SMC Global Securities. Vandana, thanks for joining us this morning. Everyone's really interested in what's happening to these silver prices. Let me first understand that from you and really what's causing that artificially inflated price level here in the domestic market.
Yeah, hi, Abha. Good morning. Thank you for calling me. And this is the Magic Metals right now. And the platform, it was built in last 4-5 years when we see that the demand was higher and supply side was really very scarce. And you know that this is the metal where we see very less amount of recycling as it is happening in gold. And new silver mines, it takes around 7 to 8 years to come into action. So this time, the demand from that AI hardware, solar, 5G, these are hot demand for silver, and there is no substitute of silver metal in these categories, and it is escalating that ETF buying also. So first, I share this stock taking the buy side of this silver ETF, and there was a scarcity, and everywhere you will find the scarcity stocks out of stock. Like if you go to buy for that silver coin and bars in US, in Europe, in China, everywhere. So this is actual supply tightness in the metal. But yes, some speculative buying is there right now, and what is happening is more exciting that now the physical silver, it is $3 premium as compared to the future silver. It is not happening in normal circumstances. So this is supply tightness in silver, and this is the war between buying between physical silver and digital silver, and physical silver is winning anywhere. So investor, they should wait to get normalize this situation. After that, they can get into the silver SIP ETF. And yes, after 2-3 months, we can see that the situation should get normalized. And two things I want to add in that: it is now considering as a strategic metal because many central banks, apart from gold, they are buying silver physical and silver ETF as well. And silver ETF is physically backed, so there is lots of pressure on silver, physical silver. And fourth thing that Trump recently or US recently categorized it as critical minerals. So critical minerals, these are very hot things right now. And whenever you see the name critical minerals, they want to possess it. Any country, any company. So there is a huge demand of physical silver, and it is driving up this supersonic speed rally in silver. And in option, we are finding positions near $55.
Okay.
So yes, rally is yet to get overdone, and $55 it is going to be seen soon in the market.
Fantastic. Thanks so much, Vandana, for running us through all the possible scenarios and outlook on silver, as well as really how best to invest in it at this point of time. We've got limited time on the show, so Amrish, I just want to get a final call from you in terms of really what you're tracking right now in the market, what you feel are the areas that one should focus on, how you're sort of awaiting results from earnings season as well, and as we count down to Diwali.
Going to be muted, so don't have really too much of expectation from these earnings. But I think overall we should see some sort of an uptick from the December quarter results, which is Q3. I think that's a time we should see the markets possibly touching new highs or possibly going beyond that. For the time being, I would say consumption is the story to be looked at because of GST. Clearly, I mean, this is one space which is getting benefited. So in consumption, right from FMCG, white goods, automobiles, I think these are the three segments to be looked at in this space. And the other one, which I've again started looking at, is railways, because that's where, I mean, we had seen an extremely good move. And after that, we had seen some sort of a correction, a decent correction, because of the execution issues. But now I think the execution issues have been sorted out to a large extent. So railway stocks would be the other one where one should be looking at. And the third, which has been my favorite for the last, I think, 15 months, but not really done too well, expected to start doing well, especially looking at the way US is behaving with China, is the specialty chemical space. I think that's the one where I think should get a decent boost because of these issues.
All right, Amrish, thanks so much for joining us this morning. Shail, thanks as well for being with us. That's where we leave it. Right now, quiet on the index. In fact, slipping a touch as we speak. 25,200 is where we're trending about. Power pack lineup today on Business Today TV's Diwali special. Market Masters at 11 a.m. Catch Ramdev Agarwal, Chairman and co-founder of Motilal Oswal Financial Services. And at 1 p.m., don't miss global commodity guru Jim Rogers sharing his festive outlook. Tune in to our YouTube channel and stay tuned. Plan, profit and prosper with Business Today TV.